A lot of banks are saying that there is no problem with the credit cycle. The 14 could become 13 and 15 could become 14, but the credit growth for FY24 looks solid. And when I look at brokerage opinions, whether it's UBS or Morgan Stanley or others, they are of the view that banks have reached the peak of their earnings. Do you think we are in for a surprise there?
So I think so the peak of margins is what I think I would definitely agree with, and that's what even our banks team have been talking about. But on asset quality, it doesn't seem like we should be worried, at least from a 12 to 18-month perspective. And if you look back historically, asset quality cycles have been the bigger drivers of banks' performance than just margins, right? And you would be worried on the stocks if they were trading super expensive at a big premium, and hence even the correction on margins is a big risk, and you have to get away from the sector. I don't think we are at such a situation right now. So we actually have banks as one of the most preferred places for us in the market. Primarily because the credit growth, given the kind of nominal GDP growth that we have in India and the penetration levels, I mean, you'll get decent credit growth. We should be more focused on asset quality cycle, and that's where we should be kind of comfortable from the next 12 to 18 months perspective. And I wouldn't I wouldn't use the margin speaking and coming off as a big sell argument on the bank sector. I think the valuations are quite compelling given the context of where the valuations are in the rest of the sectors.